Welcome to Loup TV. I'm Gene along with Doug. Today is Tuesday, January 11th. Our key topics today are Apple in terms of some news around Sol and the new payment systems that may be enabled there. Also talk about the EV markets more broadly, continue to get a lot of attention. But we will kick it off with, of course, a commentary. No day this time of year is complete without some comment from Chairman Powell. And I'll lead with that just very briefly. Is Powell, of course, looking to get reconfirmed, was, I guess, testifying today. And there was one comment that jumped out to me. This is related to the trajectory of interest rates. One lawmaker had asked a question about quantitative easement and a follow-up relative to inflation. And he mentioned that our cadence may very well quicken the pace of what we need to do. But I don't want to say much more now. We'll wait till the end of the month at our upcoming Fed meeting. That, of course, is a relief for me to hear that, because, of course, I want the Fed to take as much action as needed, the proper dosage. Move rates up faster. I just want to get this in our rearview mirror. Let the investors know that you've got a strong handle on this. The worst thing that can happen is them to do nothing. And I was encouraged that he indicated that they would be doing something. So, of course, we're going to get some inflation numbers tomorrow morning. The bogey is 7%. That would compare to 6.8% in November and 6.2% in September. So Fed better take some action here, or we're going to have a longer term problem with inflation. I digress because, of course, we are not market and bond people. We are technology people, and we've been long time Apple followers or researchers, which brings us to our true A topic, which is some news that Apple is saying that they will move towards allowing third-party payments in South Korea. If you recall, earlier late in 2021, South Korea had some legislation that basically would require Apple to allow such third-party payment systems. And Apple's, I guess, making good on moving in that direction. And I wanted to bring in Doug here and get your first reaction when you saw that headline.
Well, it feels like it's maybe an extension of some of the things we saw with the Epic trial in the U.S. It's apparently, I think, going to be kind of a country by country thing where, maybe in certain countries, Apple does need to allow more flexibility with third-party payment mechanisms. We'll see it, and I think time will tell how it all plays out. But the bottom line is, it does feel like this is, a real trend regarding the App Store, and it could be a headwind, I guess, over the longer term to App Store take rates. I don't know if it matters necessarily over the long term, but it does feel like it's something that's kind of gaining some steam here.
So agree. I would say gaining steam is. I'm not quite comfortable with that perspective. I think this was kind of as expected in South Korea. And I think what it comes down to ultimately is that it's going to be a country by country. The US, I think for the most part, this was a substantial victory that Apple had in some of the lower courts in 2021, really, winning on 9 out of 10. The one piece that they lost on was steering. They got a stay on any action on that. So it's to be determined whether or not that even holds up. But a question you mentioned, there could be further impacts to take rates. I have an opinion, and I'm curious if, in fact, like the U.S. is in a good spot right now. Why do you feel that there could be more changes coming to take rates over the long term?
Well, I think it comes down to a simple question, which is what is good for the consumer? And I think that choice is good for the consumer. I don't think that means that Apple's payment mechanisms need to go away. They should absolutely have a payment service, and they'll probably have the best, most elegant solution. But I think cutting off other payment solutions feels like it's actually not good for the consumer. And I think anytime you have a situation where a platform sort of deters competition from that perspective, it's not always great for the consumer. So I say, well, let Apple have their payment mechanism and they can charge the fees they want to charge, but also let other third parties come into the system too and offer competitive platforms and just see what the market does, see what the consumer really wants would be my perspective on it.
I would follow that with, hasn't the courts spoken in the U.S. at least in favor of Apple that they don't need to go down this road?
I'm saying set aside the courts, and I'm saying what is the best for the consumer. And I think that Apple has made itself, a champion of the consumer. Look at how they've talked about Facebook and sort of the advertising business and the issues with data privacy in those businesses. And they have a point. I think that there have been obvious data issues with a lot of the advertising companies. But to me, if Apple is really going to be the champion of the consumer, I think that this would be a real stance if they went and said, look, you know what? It would be fairer for the consumer if we let a third party come in and offer an alternative payment mechanism alongside our payment mechanism, which we're going to try to make the best in the world.
Isn't it a slippery slope, though? You introduce a different payment system that you could inject some toxicity into the platform around security, just ease of use too. I get my view is that agree that Apple wants to do what's best for the consumer. I think what's best for the consumer is to have an Apple-based payment system. I think actually consumers don't care. I think they want to use what works and what they feel is secure. And I think if Apple allows what works most easily and secure, wouldn't that be in the consumer's best interest? I guess I'm having a hard time understanding what is the benefit, like the consumer benefit of having multiple. I can see it from a developer standpoint, what their benefit is, but I don't see it what the benefit for the consumer is.
Well, it's price. It's price, and that's exactly, I think, what was at issue in the Epic trial, right? If Epic feels that they could offer a V-Bucks pack for $7 when they don't have to pay Apple's 30% fee, well, that's better for the consumer. And so I think it's pretty simple in that perspective. Adding competition to the platform would almost certainly have Apple have to reduce its take rates. And the toxicity thing, I think Apple's done a great job not having toxicity and virus-laden apps in the App Store as it is. And so an easy solution there might be, hey, Apple should charge anybody who wants to have a third-party payment mechanism available on the App Store, charge them to have it verified and make sure that it is safe and okay to use.
Potentially. My sense, by the way, just because I'm going to invoke my age here, my 50 now plus years, and have the final word on this one, is that eventually, there's this final piece around steering that still needs to be figured out in the US. And let's take the case that the developers win that, and that Apple has to enable advertising, enable some form of steering. I suspect that the vast majority of those developers will still convert at a higher rate working within Apple's walled garden. I think that it's still going to benefit the developers. And so just by getting a lower price for developers doesn't necessarily mean that it's best for their business. I do think that over time, the data is going to speak for itself. There's some clearing price, whether it's 30 or 15%. It's probably somewhere in between where the developers say that this is where they need to be. As a reminder, Apple did announce earlier in the week that revenue from App Store to developers was up 33% in 2021. That was an acceleration from 2020, and part of it was because of the more accommodating take rates. But I think all in, it still is a little bit perplexing to me that developers are angsting over this when they've created some pretty amazing businesses on the backbone of what Apple's hardware and software does. If it's all right, Doug, I would like to kind of keep that as the final word and give you the first word on a bunch of EV news. I'll just hit them rapid fire here. Is that China EV market now up 100% year over year? It's now 15% of cars sold. Porsche has announced that they're going to be doing their own autonomous system. If you're curious, Porsche does just under 300,000 vehicles per year. Tesla will do over 1.3 million this year. Magna's done some acquiring of some talent around autonomy. And I'm curious if you kind of put those three together, a lot of good mojo in the EV space.
Yeah, I would say I think the news is probably directionally positive, as we should expect. Everybody agrees and I think knows EVs are the future of transportation. I don't think there's a question there. For us,
Doug, let me interrupt. I could have sworn a few episodes ago, maybe it was just an off conversation that you were planning on buying or 10 years from now, you said you'll still have a gas car.
I don't know if I said that I think the Ford Lightning was going to outsell the Cybertruck. I still stand by that.
Okay,
And I think that was
I'm thinking of a
2025.
different conversation, but keep
Yeah,
going. You
I
believe
think it's
EVs are the
today.
future.
It's something like today. If you bought a car, what would you buy? I think
I
I'd
know what
probably
it
buy a
was.
gas
I know
car
what it
still.
was. We were talking about charging lines at charging stations. That was it.
Oh yeah,
And then you said, "Well, I'll just blow by all of you and go to the gas station, and so I
yeah,
won't have to worry about the charging lines." That was
yeah.
the comment that you made.
Having a gas vehicle be the ultimate contrarian play in 8 or 10 years. That's right. And then you'll have to wait in lines for charging. You're right. But I think going back to the news, again, I don't think that any of this should be overly surprising. Where we kind of come out on it and where we ground in, the EV space had a tremendous year last year. Rivian IPO, we had Lucid come to market, and a ton of other suppliers in the value chain, and a lot of them got marked up very quickly, and a lot of them priced in a lot of future value, because every company, every stock, and this is something we've been talking a lot about internally more recently, given the pullback in tech. But a stock price is basically just a demand for some level of future business performance. I think that's the right way to think about a stock price. You have to eventually, as a business, generate some kind of cash flow that justifies that current stock price, if you discount that cash back to the present. And so, when we look at what has been priced into the EV space, it gives me certainly some pause. It gives us some pause. And I think that, this news cycle early on in the year, I feel like we've talked about EVs almost every episode in the last 2 weeks. I think the news cycle is part and parcel of sort of the hype around the space. And I still think it points to maybe, a cooling off, at least for now, in some of the stock prices we're seeing in the EV space.
Yeah, I think it's hard to imagine this kind of level of momentum continuing throughout the full year. As a reminder, the EV space does have a backstop in September with the Detroit Auto Show. That's lost a lot of its momentum. That obviously got pushed into CES, which we're just exiting right now. But I'm still on the same page. I think that we're going to still see, in aggregate, I think a lot of the momentum around EVs in 2021 will slow slightly. Still believe very strongly. I think there's, with the value chain, I think there's a whole nother, which we're going to talk more about in future episodes, about all these value chains that lead up to the EV brands. But that, for us, I think, is where you're going to see a lot more excitement this year. So stay tuned for that. And on behalf of Doug and Gene and Loup TV, bye for now.